Hi there, Tanya here at Westchase Financial Planning, and today we're giving you our 2 cents on developing family values using donor-advised funds. Charitable giving by many families is dysfunctional in 3 respects. The first one, it doesn't always take into account the values of the children. Generally, parents make charitable gifting decisions without input from the children. Second, it doesn't incorporate a long-term strategy. Instituting a formal process for having annual family meetings, such as Thanksgiving, enables families to have an interactive discussion of transcendent values. Last, it doesn't always take advantage of significant tax incentives. Most importantly, families donate after-tax dollars when they could be more efficiently using pre-tax dollars for charitable contributions. So what is the usual tax structure of charitable gifting? Stock is sold and taxes are paid on a capital gains, which is reported on Schedule D. Other funds are gifted to churches and charities in cash or checks and reported on Schedule A. The original tax advantage strategy for charitable gifting includes appreciated stocks, which are held more than 1 year and are directly donated to the church or charity. As a result, there are no capital gains tax charged on the profit in the stock, and the donor still gets a full tax deduction based on fair market value of the stock. So what are some problems of gifting appreciated assets for tax advantages? Well, it isn't usually feasible to donate appreciated securities to small entities because they don't have stock brokerage accounts to accept the contribution in kind. It's also very complex to make gifts to multiple charities because of having to use odd lots of stock. Last, it is very difficult to gift real estate assets. So how does the donor-advised fund work? Basically, the client opens a separate brokerage account in the name of the charitable foundation that is a DAF sponsor. You can call it whatever you want. Appreciated stocks or real estate is gifted directly into the donor-advised fund. The assets in the fund are invested with full consideration to the directions of the grantor. They are irrevocable, and the grantor can advise the foundation to make grants from the DAF to any qualified 501c3 charity. Here is a charitable contribution comparison that you may want to pause this presentation and take a look at more specifically. So providers of donor-advised fund are provided by 2 organization types. They can be commercial, such as Schwab, Fidelity, Merrill Lynch, or banks, etc. They can also be large charitable organizations such as the Salvation Army, Kiwanis, Red Cross, community funds, or large universities. Grants can be made through these organizations to any 501c3 organization of your choice, and they are invested until they're granted. So what is the optimal strategy for a donor-advised fund? To fully fund your donor-advised fund during the years prior to retirement when you have the highest income to maximize tax benefits. After retirement, you can continue the same level of philanthropy without having to use much cash flow. The balance remaining in your donor-advised fund becomes the vehicle for the family's continuing charitable donations after your death. The optimal family strategy in setting one of these up is to allocate a specific amount each year without necessarily divulging to the children the actual amount being given, where those grants are determined at an annual family meeting. Some additional details. Grants from the donor-advised fund can be processed on paper or via the internet, which is more common. A range of investment options are available for the grantor to choose from when determining how the assets in the DAF are invested. The sponsoring organization does all of the paperwork required by the government and maintains the individual accounts and assures that the money is only distributed to qualified organizations. Here is a charitable calculator example, and you may want to pause this presentation to take a more specific look at it. So what do you think? Westchase Financial Planning can be found on Facebook, LinkedIn, and Twitter. You can also email us at Forrest, Forrest, at westchasefinancialplanning.com. Thanks for listening, and we hope that you enjoyed this presentation.